In this video, I would like to talk about the current state of the US market. I think the sentiment is very weak at the moment, and we are shifting to more speculative territory. I will show you some slides, I will show you some websites to explain my point. Now we have a market that has recently entered correction territory. 1 month ago, 1 month and a half ago, we were at all-time highs, and then for some reason the market is dropping 10%, macro risk, etc. And a lot of people have panicked because a lot of people have taken too much risk in their investment portfolio. They have taken leverage, they have invested in speculative stocks, and now they are crying because these stocks are down. And you see this phenomenon of taking too much risks and then getting flushed away by the market. That's not a good sign. That because most people that do this kind of thing of taking more leverage, taking more risky bets, they want to get rich quick, and that's the fastest way to lose all your money. And a lot of beginners do this. If you look at the fear and greed index, this is a metric that I love. You look at a fear territory. We've been in extreme fear for a while. So now in this 10% market correction, we entered extreme fear territory, and we've been staying in extreme fear territory for a while, for a few weeks, but the market was only down 10%. So on a year-to-date performance, the S&P 500 was down like 5%, something like this. So minus 5% performance and already extreme fear territory. That's a sentiment that is really weak. And if you look at the S&P 500 for the if you look at the PE ratio for the S&P 500, now we are at a PE ratio of roughly 28 to 29. This is not cheap. This is a bit expensive. Nothing extreme, but a bit expensive. And the fact that a lot of people panicked over this 10% drop show me that you have a lot of leverage in this market. And I wouldn't be surprised if for 2025 we have several instances when the index drops 10% and then rebounds sharply, and then drops 10%, rebounds sharply. You have a new US administration that is doing a lot of stuff for tariffs, a lot of Twitter threats, a lot of macro-driven stock market correction. So you can expect a lot more volatility in this market. And people are not expecting this volatility. People are not used to this volatility. When Biden was the US president, you had a calm government that didn't change its mind every day. Now with the Trump administration, everything is changing every week. Everything is changing every day. You have new tariffs, and then they are getting removed. And after the tariffs, it will be something else. You will have a lot more volatility. And if you can go back to the videos I made in 2024 saying exactly this. The first Trump mandate had a lot of volatility because the president changed his mind very often, and the market doesn't like the uncertainty. But now it seems like a lot of new investors started to come in this market, and new investors didn't experience a significant drawdown. Even the 2022 drawdown was like 2 or 3 years ago. So if you've been investing for less than 3 years, you have never experienced a drawdown when markets are going down. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. So immediately when the markets are going down 5 or 10%, you go into fear territory because people don't have any clue about risk management, and that can be a big risk for 2025. If too many people take too much risk, I'm talking about individual investor. I don't know what the whole market will do, but if you are watching this video, it means you are a retail individual investor investing your own money, managing your own portfolio, and it's in 2025 risk management will be clearly important, much more important than previous years. Like a lot more important. Leverage, speculative companies, speculative stocks, unprofitable businesses, sexy stories, AI, all the hype, all the buzzwords. It will be very important to assess the risk if you want to invest in these industries. And I see a lot of Twitter threads, I watch a lot of YouTube videos explaining the bull case for the speculative assets. It will be a 5x, it will be a 10x. And I will suggest to be very cautious, because now we are entering a market 2025 without any visibility regarding the macro environment. So only look at businesses, only look at fundamentals, micro. I mean, even if you look at the consumer sentiment for the US, we are at the time seen at the same point we saw in 2022. Sentiment is so low, guys. I'm using this website, the US Michigan Consumer Sentiment. It's a great website to check what is the mood of the market. Normally you buy when the sentiment is dead low, like we had in June 2022, and seems like we are reaching the same territory. I mean, we were in the 50 territory in 2022, and then the market rebounded, and now we are already at 58, and you see how quickly it has changed over time. I mean, seems like people don't expect anything for 2025. I remind you that 1 month and a half ago we were at all-time highs, and people expected the S&P 500 to go up by 30% this year. Yeah, this is the best administration we've had in years, business oriented, this is fine. And boom, in 1 month everything has changed, all the estimates are down, the mood is down, the sentiment is weak, you have paper hands, people are selling their stocks, people are just depressed in 1 month. That's the price of investing in stocks. You get the stress, you get the experience, and you will get better over time. So my advice to you for individual investors that want to compound over the years is minimize the number of mistakes. Don't put too much of your portfolio into speculative assets, businesses you're not sure of. Focus on exactly what we do on this YouTube channel, right? Focus on businesses, focus on fundamentals, focus on revenue, earnings, cash flows, reinvestment opportunities. All the rest is noise. Don't get scared out of this market because of a small, tiny correction. Today I'm recording a video and the market was up 2% yesterday, and already the sentiment has changed. We are back. This is the bottom. Let me buy. And people change their minds so often. People don't have any conviction in their picks. So seems like the mood is swinging very rapidly. And please be cautious. Please don't chase higher highs without any regards to valuation. Pick great stocks available at a great price. Don't just follow the trend like a ship. It will cost you a lot of stress, a lot of money. It will cause you sleepless nights. It's not recommended at all. So as always, guys, don't get spooked out of this market. Stay invested. This is what I'm doing, right? So I'm literally walking the talk here. I am 100% invested in great companies available at a very good price. So I'm here for the long haul, and if you want to invest in the long term, I would recommend this. The same thing. Don't panic sell at 10% drawdown. Don't panic buy if the market goes up by 2% in one day and you are back to hype mode. Have a clear process. Have a framework. And as always, if you struggle to do it yourself, I have the coaching program. Okay, that's it for today. I wish you a good day. Bye-bye.
If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.